Right. So first, welcome everyone, and thank you for being here. Today we have a lot of people, so I'm really happy that you guys are spending an hour or an hour and a half with us. I'm really excited about what we're going to be sharing with you today because we are launching something that we've been been working on for a very, very long time. And I think what you're going to see today is going to fundamentally change how you approach your trading research, whether you're trading stocks, future, options, crypto, and so on. So today we are introducing QUIN 2.0, which is MenthorQ new AI Quant Engine. And I want to be clear from the start, this is not another chatbot. QUIN is a research system that is built specifically for traders, and that combines everything that we've been doing for the past 20 years with live market data and real quant models and workflow. So by the end of today, you're going to see exactly what I mean and why we believe that this is really going to change the industry, and this is really going to be amazing for you guys. And at the end of the day, at the end of the presentation, we're also going to have some really nice intro offer for you guys if you want to join, if you want to upgrade. So stay tuned and don't miss those. We're going to talk about that at the end. So here is really the uncomfortable truth for everyone, right? So retail traders have always been fighting with one hand tied behind their back. Not because you're not smart, not because you don't work hard, you don't study, but because the tools, the data, and the frameworks that institutions are using are never or were never being accessible by traders. So I think about the Bloomberg terminal, how much it costs. Retail traders cannot really afford that kind of setup. So think about your current research process. You probably have multiple tabs open, maybe multiple trading platforms. You have a chart here, news over there, maybe a screener somewhere else. So you're trying to really piece everything together from 5 different sources or more, none of which talk to each other. And you're trying to really get a picture of the market and define what to trade and why. So this is what is called fragmented research, right? That's data without the context. And that doesn't bring an institutional hedge because you are basically looking at all different places and all different tools might give you different answers, right? So all of this, think about what has changed in the future trading space, in the option space, large option flow analysis, gamma positioning, quant screening, historically has been locked into platforms like Bloomberg or software that really cost a 6-figure amount, right? So this 90%, unfortunately, is really the truth. It means that you're not underperforming because you are not working hard, but it's really because you didn't have access to the tool set that institutions have, right? But with AI and what we see in the past 2 years, everything changed. Retail traders finally have a chance to compete with large institutions. They can finally create a framework that can lead to a better consistency and a real edge. For example, we work with many traders, and what we know about traders that consistently win is that they are not the ones consuming the most content. They're not the ones with the most indicator on their charts. And Patrick is a clear example. They're the ones who have a clear process and they execute that process repeatedly. So every winning trade follows 4 steps, right? Whether you know it or not, whenever you trade, you're following really 4 steps. The first is really the framework. So you need to understand what you're trading. You need to learn about the asset that you're trading, whether you're trading futures or options. You need to have at least a knowledge of what you're doing. The second is really understand the market condition. So in this environment today, is it good to go long future, or is it better to maybe do some hedging or trade options or trade spreads, all of this stuff, right? So understand in which market you're on and then basically define the condition. The third step is really screen the market, right? There's so much data out there. How can you effectively screen and find opportunities that can help you be successful? And the last step is really then, once you find those opportunities, how can I make the trade? How can I manage my take profit, my risk, and my stop losses and all of that, right? So those are kind of like the 4 steps that basically any trader would follow to be successful. The problem has always been that these 4 steps always live in different places, right? And require different tools, take hours to complete until now. AI obviously changed the equation, and for the first time, you can have all those 4 steps. So learn, read, screen, and act in one integrated quant engine. So this is not really a small improvement. This is a massive structural shift, and we are very, very excited to bring you QUIN 2.0 today. So let's go over of what QUIN 2.0 is, right? At its core, it's the combination of 3 things that have never existed together in one place for retail traders. The first one is knowledge, and we're going to go into details in a second. So not generic knowledge, of course. You can access generic knowledge in all the traditional AI tools. But what about MenthorQ proprietary knowledge? So our team is formed by traders, ex-market makers. We've been in the market for over 20 years, and we've developed a set of documentation, articles, everything that you can find in our blogs, thousands of hours of video lessons in our academy. But we also have internal papers, research, books that we've read, all of our notes from our previous experience. So I worked at Bloomberg for about 11 years. My partner has worked for various market makers. So we have a lot of information that we've consumed over the past 20 years. And most importantly, we have live trading journals and strategies. So all of this has been ingested, organized, and accessed by QUIN. The second is really data. So let's go in the second step. In order for an AI tool to be successful, it needs to have access to data, right? So whether it's traditional market maker, market data, but let's talk about why you're here today. You're here today because, of course, you find the MenthorQ data valuable. You find what we do valuable for your trading. QUIN has access to our indicators, our option chain data, our pricing data, open interest, gamma exposure, our Q score. We have access to real-time news feed. Everything is connected in one place. And the third step is then once you have data and once you have knowledge, how can we then build intelligence? So the third step is really our intelligence layer with our quantitative models like our gamma exposure, our volatility models, our Q score, the actual really quant infrastructure that we've been building for the past 20 years. So combine all those 3 together and you get QUIN. QUIN is one AI that can research, screen, validate, and help you decide all in one place. No dashboard, no manual workflow, no disconnected tools. So let's go over the first pillar, which I think is a very, very important one, which is knowledge. So again, as I said, our team has 20 plus years of institutional experience. We've obviously built, if you guys have gone through our academy, our financial wiki page, we have a lot of documentation, right? A lot of documentation that we put together. We've selected it, we handpicked that documentation, and we created a really amazing knowledge base. So we're talking about all the documentation that we have in the guides, all the academy, but we also have internal documentation that we've brought together over the past 20 years that is also being ingested by QUIN. And on top of that, of course, our live trading accounts for the past 2 decades where we took real decision, real market condition, everything is documented there. So our AI has really been trained on what we've done for the past 20 years, essentially. So what does this mean in practice to you, right? So when you ask QUIN to explain a concept, you get an explanation grounded in our framework, not a generic textbook answer, right? So you'll get the perspective coming from the MenthorQ framework about your question. So you can ask things like, explain gamma levels like I'm a newbie, give me a roadmap for SPX, how does your Q score work, or show me the gamma exposure. But these are really simple questions. When we go into the demo, you're going to see the complexity and what are the things that you're going to be able to do with QUIN. Next is data. So the second pillar is really market intelligence. And this is where Quinn goes beyond just knowing to understanding to what's happening right now. So Quinn has access to the full suite of MenthorQ data. And I mean the full suite, including gamma, delta positioning, volume, open interest, our gamma levels, our blind spots, our swing model, our skew, our volatility models, our VRP. We also have access to news, intraday data, sector positioning, and the data is just going to keep growing. So over the next few months, we're going to release our earnings models, our live data. So again, this is just the beginning. So now the key difference is that most AI tools, even the most sophisticated ones, can talk about this data in theory. They can explain what gamma is, but they cannot tell you where gamma is concentrated in SPY today, because they don't have access to the data. So yes, you can feed the data to these AI tools and they can do a great job, but they do not have access to the data. Quinn does, and most importantly, it can help you basically define, and we have really a big intelligence layer that can help you understand the data. So instead of staring at a dashboard, looking at the net gamma exposure chart, trying to figure out what it means, you can just ask Quinn questions like, what is the gamma exposure profile for QQQ, and how it has changed over the past week, and how can you interpret that? So you can really have really intelligent conversation with Quinn to talk about data. But the third step is actually the most important one, which is research automation. And this is really the power move that we did, and I think this can be really game-changing. This is really what separates Quinn from every AI tool in the market. So first, we have our intelligence screener. So instead of manually filtering through hundreds of tickers across multiple platforms, you can describe what you're looking for in plain English, and Quinn finds it. You can screen for stocks, for example, near the core resistance with an IQ score. You can filter by IV percentile, gamma positioning, momentum, and we have about 97 plus quant parameters that you can use in a single natural language query. Second is side-by-side comparison. So you can compare any tickers across the MenthorQ universe and metrics. You can look at historical data. You can look at current positioning. You can look at volatility behavior, all in one single query and response. This is the kind of analysis that would take hours or days that can now take seconds. And third, really, is the complex multi-factor queries, right? So this is where it gets really interesting. You can run the kind of research that really only professionals and quant team are doing right now with massive Python codes and data structure, databases, and so on. You don't need a spreadsheet. You can simply ask Quinn, and we're gonna show you that in a second. So you can filter, you can rank, you can surface across different stocks. You can, for example, screen around the universe, like in this example, find me all the stocks in the S&P 500 with a low IV rank and a Q score greater than 3, right? So these are simple, but we're going to get into more complex queries once we go into the platform. So now let's have really an honest conversation about AI, because I think there is a lot of hype. Of course, everybody's talking about AI, but I really wanted to give you a grounded perspective on where AI is really great and where it fundamentally breaks down. And then once we go into the demo, we can show you an example. So AI is really great at handling unstructured text. So summarizing documents, answering questions about a report, explaining concept, generating educational content. If the information exists in a written form, then modern AI can really work with it brilliantly. That's the left side of the slide. But here is where it breaks down. The moment you need to handle structured, numerical, quantitative data, the kind of data that you need for your trading decision, that's when generic AI starts to fail. For example, if you are looking at option chains, JAX table, tick data, screeners, AI frequently miscalculates. It hallucinates number. It presents a confident sounding output, but the data is completely wrong. So if you are making a trading decision and you're trading with the wrong data, then of course you're basically risking of losing your capital. So and the fundamental problem really is that if you're here today, you believe that we're doing something great. ChatGPT, Copilot, or all the other general AI, they have zero access to our data, zero access to our model, zero access to our trading intelligence. So you can ask ChatGPT where gamma is concentrated in SPY right now. It wouldn't reply to you with the right data because it doesn't know. They don't have access to the data. So unless you build a data structure and feed the data to the AI will not understand and will not be able to answer. Most likely it's going to make it up and you're going to trade with the wrong data. So this is really not a criticism of this tool. They're actually extraordinary for what they're designed to do, but for quantitative trading research, they're currently brilliant at the wrong things unless you can feed them with a data structure and with the data. So what we've done, we've solved the structured data problem, right? So obviously this is a very bold statement, but I will show you what we've done once we go into the demo. So Quinn is not just a chat wrapper on top of an LLM. Let me say this again because it really matters. Quinn is not ChatGPT with a trading skin on top. It's a purpose-built quant engine. So here is really a simple example on how the architecture works, and we built and we operate through 3 interconnected layers. The first one is the data layer, right? This is really the quant engine. This is specifically engineered to handle large volumes of structured financial data with quantitative precision. So anything from option chain, open interest, gamma exposure, Q score, levels, a lot of tickets. We cover thousands of assets. So everything has been engineered for precision, not for guessing. So that's the most important, the first step. The second step is really the unstructured knowledge layer, which is our knowledge engine. So we've already talked about this, but obviously we've trained our AI with our proprietary knowledge, with our guides, with our video lessons, our research paper, our trading journals. So here is where the AI gets the knowledge from. This is a very important step. And its selected knowledge is knowledge that we've been building for the past 20 years. The third step is really where it gets interesting, which is the intelligence layer. So this is really what makes Quinn unique. It cross-references the structured data with the unstructured knowledge and produces grounded, explainable outputs. This is not guesses like most of AI might do when they hallucinate. This is not hallucinated numbers. This is actual reasoning that you can follow and verify through the platform. So the results is really a low hallucination by design because the way we built the framework. So really, this is really the key difference. Here is really why Quinn can win. This is really a comparison to generic AI, other fintech AI tool. So the first differentiation here and the first things that we want to see is really the hallucination, right? So we want to stress that basically the way we build the tool is low by design. So we're trying to give you access to accurate data. So we built it in a way where AI is not going to be able to guess or give you the wrong data. The second is really our proprietary knowledge. So our proprietary engine and data. None of these tools have access to our data. So Quinn has full access to our models, right? And then, of course, our experience, our 20 plus years in the market experience that has been used to train our AI, right? So those are some of the things, and this slide really can help you understand why Quinn can be your go-to tool using AI for trading. All right. So now let's go over something really. How can you guys start using, and how can you get actionable with Quinn as soon as you get access to? So we're going to show you some example in a second, but let's go over some really three simple use cases. The first is really learn, right? Let's say that you come across a concept like gamma squeeze or gamma exposure. Maybe you're new to JAX, you don't know what gamma is. You can simply ask Quinn, what is gamma, or show me the MenthorQ models that can help you understand gamma exposure, and Quinn can give you really an answer very, very fast. You can also build a learning path, so you can actually start learning directly through our academy, through our data. The second use case is screen, right? Find opportunities, right? So how can I find stocks that are matching certain criteria? How can I find ETFs or indices, or how can I see things that match my criteria? So no more guessing. Now you can use Quinn to build the process. And then the third step is really validate and decide. So before you enter a trade, you can actually talk to Quinn and understand what the data is telling you. So you can do a really deep down analysis on a ticker. So let's say that you find a stock that you're interested in. Let's go over and see what the data is telling me, and maybe if your setup is actually matching what market is telling us on that specific ticker, right? So very, very simple. So this really shows you, again, in a single step, how can you use Quinn, teach yourself, run a screen, validate an idea. These are just simple problems, right? So we're going into a demo now. Before we go, and Patrick, if you want, you can also unmute yourself. We want to present you guys with the promos that we have for you today. If you're interested in joining, we're going to show also this at the end. So if you are not a MenthorQ user, you can start using Quinn for free. So you can create a free account, and Alex is going to send all the links right now in the chat. So by creating a free account, you have limited access to Quinn, so you can test it out with a few queries, and if you like it, then you can upgrade. We have some really nice offer for our premium. So if you are interested in becoming premium or pro, here is what you have here. So the promo is running right now until next Monday. We have our monthly premium for $59, so it's a 54% off. And what you get with premium is all the models, all the indicators, the training integration, of course, our live events, weekly live events for premium, our premium community, and you get 100 Quinn messages per week. So that will allow you to do a lot of research, a lot of analysis, but of course, maybe that is not enough for you. So that's why we have our pro offer. And I want to, Patrick, if you can join as well, because with pro,
yeah, I'm here.
With pro, and Patrick is going to show you guys what we do in pro. So with pro, not only you get access to our live trading Monday to Friday, you can actually have a one-on-one call with Patrick and our pro community. You also get 10 times more messages per week with Quinn. So 1,000 messages per week. So if you are doing a lot of research and you need more access, then pro can be the option for you. And then Patrick, I'll let you also give another word on what you guys do on a daily basis and why pro can be a great option for those who are looking to start trading and learning, especially.
All right. Hi guys, ladies and gentlemen. First of all, welcome to the Quinn call. I'm so happy to see everyone here. To give you a quick review, what we're doing in the pro. So let's start with Monday. Mondays we have our live trading session. So Mondays is without recording. This is fully open mic, so it's community. Of course, you get live trading commentary from me and Maciej, and you can talk to us if you have questions, or you can talk to our members. And then you have the opportunity from Monday to Friday to book an SOS call with us after the live trading session. So if something has happened doing the trading and you need a guidance, you need a help, you need someone to talk about, or you blow up some accounts, something has really happened and you need to talk to someone one-to-one privately, then we have our SOS calls. On Monday, we shift over also to our accountability session. This is at the afternoon. Then we have our Tuesday, we have our London trading session. We have 1 hour live trading session during the London time because so many members was asking for this. So now we make it happen. Then live trading session recorded for 45 minutes and then open mic to everyone. After this, what we have free time. But if you need some SOS call, you're already there. Wednesday, what we have our morning preparation. We have also our live trading session. We have our small group session. So if you need help, if you need mentorship, you can book this after trading. So we are there for you in a small group, maximum 4 person. And we talk about your trading journey, what's hold you back, and so on and so on. On Thursday, live trading session. London live trading session, New York Open. Then we have Friday, where we have also our live trading session with open mic with the community. And yeah, that's what we're doing. So basically, one-on-one call with us pro mentors. That's the SOS calls. You have the pro community, daily live trading sessions. And if you was following me or Maciej, doing YouTube sessions where we have our morning prep. So this will be happen also on Tuesday, Wednesday, and Friday, now exclusive for the pro group. And don't forget, we have also every single week some masterclass where we're going deep dive and some topics. This week, Fabio will be showing up also in the pro room for deep dive into Quinn, how you can use Quinn only for pro members with really good insights.
Right.
I will pass this now to you.
Thank you, Patrick. So as always, guys, so what you see here, of course, is what Patrick is doing an amazing job in our pro room. So with pro, obviously, you get all the live trading on top of obviously more access to Quinn. So that can help you really see what we're going to show you in a second. If you are already a member or a premium multi-year or yearly, send us an email at info@mentorq.com if you want to upgrade, and we'll take care of you based on the subscription that you're on. You might be on a multi-year plan, so we'll give you the best option for you. I think I saw a couple of questions, but we're gonna go back to this in a second. I think now let's go over and let's go into the platform, right? So let me put this aside for a second. All right, so to access Quinn, if you are a new user, you can access Quinn right here from start the chat. Once you start the chat, you're gonna get to this page, right? So you can use a dark mode, you can use a light mode. I think light mode is easier to read, so we have make it a default, but you can always change it at the bottom here. So now what you see is really on the left-hand side, you have the ability to create a new chat. So here you can start typing anything you want, but obviously sometimes it gets overwhelming. So you don't know what to ask Quinn. What can I do? What can I ask, right? So here you'll have some questions that are gonna show up. These are pre-made prompts that we built, but you can also come into the Inspire Me section right here. And basically, this is going to have a lot of information. So we've divided by category. So let's say that you're new to MentorQ, you're looking at learning, right? You can ask any of these questions. These are just simple prompts. You can ask anything you want to Quinn. These are just pre-made prompts that you can click and access. If you're a future trader, then we also created some pre-made prompts, and we're going to go into details in a second, right? So you have it here. If you're a swing trader, then these are other prompts that you have. If you're an option trader, you have prompts here, and we're going to go into more details. Zero DTEs trader, there's a lot of our users who are trading SPX zero DTEs. Let's go over those prompts as well. But what about just general financial research? So like, I like Meta, give me a stock report on Meta, or how did NetJacks change over the past 10 days? And we're going to go into many, many examples. But everything is here. These are pre-made prompts. But then if you want, you can just come here and ask anything you want around data, around models, around research, and you will have it there. The second step is our screeners. We are also going to go into the screeners in a second. So what you have in the screeners is, first of all, you can ask a question about screening directly into Quinn, and we're going to show you in a second. But if you want to create your screener, save it, then you can come here and click on create. And what you can see there, show me top 20 stocks by. You can just simply type a query there, and what Quinn is going to do for you is going to provide you with a list of assets. You can filter, you can rank it by here, and you can save this screen. So you can simply save this. This will go into your saved screen right here, and every day you'll be able to use that, and every day will be updated with the latest data, right? But what about if you don't know where to start? Then you can come into our explore session, and you can start looking at screeners for different use cases. We're going to go over some of those. Swing trading, extreme positioning. So let's say that you want to see a really gamma squeeze candidates, extreme positioning there. Iron condor. So here what you can see, you can click on this and you can see what are the filters that we use for that type of screener. But then we also have option sellers. We're going to talk about that. Option buyers, sector rotation, directional. Those are all screeners that you're going to be able to run. They're pre-made. We curated those. But then again, you could simply get an idea from here and you could quickly add another filter, right? And you're going to be able to go through here. But the most important part, I think, is first, let's go over some things and why Quinn can be better for your workflow. So let's go over, and we took this morning, right? So show me, we're going to compare some of the other AI tools. So my question was, show me the stocks with the largest market cap in negative gamma, right? So, okay, we ask Gemini, we get 5 results. Now let's go over the data. Like, let's go to the dashboard and let's look at Tesla, right? So here, Gemini is telling me that Tesla is in negative gamma and one of the stock with the highest market cap. Let's go to our data. Tesla is actually in positive gamma. Let's look at NVIDIA, which is another of the stocks that we find here. And we see that NVIDIA is also in a positive gamma. So what you're getting here, you're trading with data that is not correct, right? So let's go over and do the same thing in Quinn. So let's go to Quinn. Let's create a screener. Right, so here we get list of asset with our JAX data, market cap, and then we can always go and see. So let's look at JP Morgan. We are in negative gamma. We can look at our key levels and we can see that our net JAX minus 90 million, and here minus 90 million. So obviously you can always reference the data that you see from your dashboard directly into here, right? This very, very powerful. Let's go and see what we have here. Technology stocks with the biggest IV rank and negative JAX, right? So all of this is really what we call hallucination, right? We are only getting a few results. The data, we also looked at it, is not really correct. So you get a set of data. Let's go here, right? I asked Claude the same thing, and he gave me a really nice code to build a screener. The technology stock with the biggest IV rank and negative JAX, right? So I get all of that, not really what I'm looking for. And I'm asking, can you find me these names, not build the screener? Here, what you see, I do not have the data, right? You get what a reply here. Let's go over same thing, perplexity, right? General concept, not actual data, right? So this is why, again, Quinn is going to be very, very important, much relevant, and Basic is going to really help you. But let's go into what are the things that you can do. So Alex, I don't know, I'm going to paste this link also in the chat here. This is a documentation that we put together. So you guys can open it and can follow it with me, and then we're going to go into the demo. So first is really the documentation of what are the things that you can do with Quinn. So the first thing is screening and rankings, right? Find me the best names by a certain parameter, right? And we've already seen it here. You can go in our screener and you can come here and say, okay, like let's say we're an option seller. So let's look at this screener. Show me the top 25 stocks with IV rank above 70%, positive gamma, and market cap over 20 billion. So let's click on use. And let's open it up. So here we get our tickers right here, our market cap right here. So we're looking at 20 billion. And then we have our JAX, IV rank, and market cap, right? So here you can cross-reference the data. And then, of course, you can go back to the dashboard to look at the ticker and so on. Let's go back to explore again. We can have multiple of those. Some of these are really complex, so it's really cool because, for example, you can also look at things that have changed, and we're going to go into details. Like, for example, this one, top 50 stocks that change from bearish to bullish bias, sorted by market cap, right? So here, what we're looking for is we're looking at our swing trading model bias, whether it's bullish or bearish. So for those who are looking at our data, this would be our 5-day or 20-day swing model. We're looking at these bearish or bullish bias here, and we're looking at stocks that change the bias over the past week. All right. So what we have is bias 7 days ago, we were bearish. Now current bias, we were bullish. So for example, we can look at Adobe. All right. So what we see here now, if we go and look at our swing model, we're sitting on a lower band bullish bias, right? So we're now in a bullish bias on Adobe. Let's go back a week. So let's go back to February 27. Adobe was on a bearish bias, right? So as you see, we're looking for the data from a week ago, and we're looking at it today. These companies have shifted, so this could be potential maybe companies for maybe a change in trend. So very, very easy. Think about how long it would have taken you to go over the different swing models, to go over comparing that to last week. Even if you were to do it through a Python code, this would have taken a very, very, very long time. But let's go now into what are the other things that we can do. So multi-ticker comparison, right? So here are some examples. So let's go and do that, right? So if we go back here and we go into Inspire Me, let's go here and let's look at financial research. And let's look at this one. So compare IV rank for Tesla, Apple, NVIDIA, and Meta over the past 30 days in a table to identify which is cheapest and most expensive historically. So let's simply click here. All right, so here we get the data on the 4 stocks that are requested. And then basically here we get the analysis. So Tesla is sitting at extremely low IV rank. NVIDIA consistently highest IV rank. So here you can see immediately which stocks are the cheapest for an option buying strategy, which stocks are the most expensive, and so on, right? So this is another example query, side-by-side comparison, all right? Historical data and trends. This is very interesting. So a lot of you have asked, oh, we would like to access your historical data. We would like to compare it. So let's go over and do that. So let's see. Let's copy this query and let's go back and start a new chat. And let's put it here, VRP of NVIDIA for the last 10 trading days. All right. So what do we know? So we know that 7 days ago, NVIDIA VRP was 11.6. Of course, we had earnings last week. Now it's sitting at a positive 4.6. And again, this is data comparison. And then you can also ask more questions. You can always ask more questions. So changes over time. This is massive. Quinn can calculate the change over time, right? And basically can calculate, for example, which stocks saw the highest IV rank change versus last week. So let's go over and go here. So you can ask here, or you can ask in the screeners. So let's go, let's look at this. All right, so here what we have, we see American Airlines went from an IV rank 44% to an IV rank of 68, and so on, right? So here we have the 3 assets that have seen the largest IV rank change. So again, this is really temporal comparison, but if we go into the screeners, then we also have a lot of really interesting screeners that we have here. So we're going to go into those in a second. The other one is really distance to key levels, right? So show me stocks that are within a certain percentage of their core resistance, put support, 52-week high, and so on. So let's go over this one as well. So we can go here and let's do so now we get a list of these assets that are basically close to their core resistance. So you can do it in 2 ways. You can ask it in the chat, but if you wanted to save this search, then you can create a screener here. Now I have IV level, but it's the same. And then basically you'll be able to save it from there. So you'll be able to save it right here. So here you see the IV level, you see the close price, and you see how far they are from that level. All right. Screening for changes over time, not just today's snapshot. This is super powerful, right? So here we're going to do another example. So this is really stocks that have seen an increase in IV rank versus 1 month ago, greater than 20%, right? So you're trying to see stocks that maybe were cheap a month ago they're now becoming expensive. And then you can do that very simple. So let's go here. Right, so this is really interesting. So real estate sector became very expensive in terms of implied volatility. And then we have a lot of other really cool names here, right? So very, very simple. So this is really changed over time. And I believe you can go back until for 1 year of data going back. So this is very important. But then the last one, which is really, really cool, is extreme positioning and percentiles, right? And then we're going to go into some more complex example, but let's look at what this means, right? So when we look at percentage, we're trying to rank compared to the past 3 months or 1 year, where we stand in terms of the field that we're using. So if you're using an IV percentile, we want to know if volatility over the past 1 year has been higher or lower compared to where we are today. And where do we stand in terms of percentile? Are we in the 90 percentile, 10 percentile, and so on? So you can search for JAX, DAX, implied volatility, VRP, skew, and open interest, right? A lot of fields, and we're going to go into that. So scrolling down the documents, here we are also going to see all the queries that you're going to be able to do and all the quant fields that we have. We have about 97 plus data points for every ticker, so you can screen really for anything. Identifiers, so you can screen by a type of ticker, stocks, ETFs, indices, and future, by sector, industry, by the name of the company, market cap, close, open price, high price, 52 weeks high, implied volatility, call volume, put volume, call open interest, gamma, delta, expiring gamma, today, expiring gamma, 1 week, 2 weeks, 1 month, tenors. So you have the 50 delta, 0 it is implied volatility, the 1 month and the 3 months. You have the skew, so you can screen for our skew data. You have our VRP and our VRP 3 months. We introduce the NVRP, which is the normalized VRP. So that can tell you basically if implied volatility is really expensive compared to historical volatility. So it's a ratio between VRP and historical volatility, term structure, and then we have our percentiles. So this is really, really cool. Call percentile, IV percentile, Q score, gamma level, swing level, right? Some example prompt here that you can use. And basically, of course, Quinn is not going to tell you what to buy and sell. Quinn is your research desk, so your research tool. So again, it's not a recommendation, it's really helping you doing the analysis. All right, so let's go over and look at some prompt that can be used, right? So the first thing, of course, we are in a period of uncertainty. We are in a period of high volatility. I think risk management is really key right now. So managing risk. So obviously, if you're a trader, you want to make profit, but the most important part is really managing risk. So how can we do that effectively? So let's go over and do some really nice research. So like, give me a sector rotation update looking at the MenthorQ data. So for example, we talked about oil this morning, but maybe we want to see what other sectors are changing and what are the things that we should be focusing on. So here we have our sectors and then our key takeaways. Healthcare, energy have seen a big increase in momentum, option. Technology has kind of like shown some divergence, and obviously the one that have been suffering are financial services, consumer cyclical, and industrial, right? So again, this is something that would take a research team hours or days. We've been doing this in moments. let's do something, and I think this comes from Patrick. If you're a futures trader, right, what are the things that you can ask, right? So show me how put support and core resistance change over the last 30 days for SPX, QQQ, and GLD. Why are we doing this? Because we want to see if positioning has shifted and if we could be experiencing a new trend or maybe not, right? So we can see immediately that put support kind of moved, went down, especially on SPX, but it didn't really change much on QQQ. Same with core resistance. What about gold? Now we are going lower. So we went from 400. This is looking at February. From a 400 put support, went all the way up to 450, and now we're sitting at 410. Similar to core resistance. Core resistance actually went up from 475 to 495. Let's look at core resistance and put support for QQQ stayed in the same range, and core resistance on SPX stayed the same. And of course, we went down from 6,800 to 6,700. So you can immediately see any potential shift, and this can give you some sort of like confirmation of what's going on. Then Patrick, I'm gonna run your second prompt, and then basically maybe you can tell me how, as a futures trader, you can use this. So what were the most active price areas in the last 30 days for SPX based on JAX? So let's look at that. So let me know, Patrick, how, for example, as a future trader, you're interpreting this data and how you can use it to become actionable.
All right, let's go. So do you remember, Fabio, we was doing last week an masterclass about why volatility is your best friend?
Yeah.
And this was really, if you be a pro member, this was a really eye-opener for us. And we was talking about put support, and we was talking about core resistance. And what we was seeing in the presentation was the shift from the put support and the shift from the core resistance, because one of the questions from our members was really how we can predict something. And if we see that we have already a shift in put support and core resistance over days, this is maybe some signal for us that we should be really careful with this as early warning, because how many of you guys want have earlier some information that something is cooking in the market? And this is something how you can use it, by the way. And this is how I'm use it also, to have a feeling about what's going on the market over, for example, the last 30 trading days. I can also go in the last 5 days. So if you be a day trader, so the last 5 days is also really interesting to really see how everything has changed and how I should be prepare myself for better trading plans. So have a plan A for long, have a plan B for short, or C, have a plan for not taking any trade. So that's why, for me, the shift from put support to core resistance is really, really important. And we should monitor this every single day. And if you're looking into the areas, so in the last areas, in the price areas, why is this important for me? Because then I have a much better overview from box to box trading. I can now map out everything on my chart, find out the really good price areas, and then I can decide better entries and exit for box to box trading. Really simple. And this is something what we're teaching also every single day in the pro room. And if you need help with this, how you can leverage based on MenthorQ, Quinn, we have also the one-on-one, we have the small group sessions. So no worries, we can do this.
Yeah. And let's go back to our Inspire Me page, because again, guys, Here we have about 97 plus quant metrics. So think about, you can combine those together. You can look at change over time. So how has the JAX percentile change for the past 1 week, together with any IV metric, any call open interest metric. And then when we go back in our Inspire Me, is really, really interesting that you look at what's happening here in the financial research section, or if you're an option trader here. And also, let's look at this. This one is really interesting, right? So let's look at the call open interest versus put open interest build up for NVIDIA over the past 10 days, right? So which side is accumulating faster? So here we are taking historically the last 10 days of call and put open interest, and we're seeing the change. And then here you can immediately see which side has been taken more sides. So we're seeing that there is more build up on the call side. So why is this important? Because then you are comparing what's happening over the past 10 days. Is the trend changing? And what are we seeing? Or let's go back to our Inspire Me section, and let's go and see some other cool query. All right, this one is cool. Compare the total gamma exposure for the tech versus financial sector. So we're going to look at the ETF, XLK and XLF over the past month, right? Why is this important? Because you want to see, especially in this time of kind of tension, in this time of crisis, what is the market doing? What have they been doing, right? So here we have our JAX data for XLF, our DAX data, XLK, and then here you can see how this has changed over the past few weeks. We're comparing financials and technology, and then here you can see what the trend here. So very, very simple. Again, to run this analysis, you would need a lot of data and a lot of coding experience. This is all done with you in a matter of seconds. Let's go back into our financial. Let's see if there's anything cool. All right, this one, compare the option matrix of NVIDIA with 7 days ago. So again, we are looking at today's option matrix versus the option matrix from 7 days ago. So let's see what has changed. Right. So here you get all your questions and answer there, and basically telling you what changed, how we were on February 25th, March 6th, and so on. So you're looking at score, you're looking at gamma, the change in gamma, the change in delta, and you can see immediately if we went up or down, and what does that mean for you. Then you can keep answering, keep talking to Quinn about this. Let's go back to our Inspire Me again. All right, this one is pretty cool. Compare Apple, Microsoft, and Google across momentum score, VRP, stands for volatility risk premium, and JAX, and which one offers the best risk reward for a 2-week swing. So we have our data here, right? And then we have our observation. And then you have all the explanation if you are willing to build trading setup on a few tickets that you're monitoring, right? So I think this is very cool. And send us any question that you want to test, or send us in the Q&A, guys. We're going to go over this in a second. Let's go into the screeners, and let's look at some really cool ones that are extreme positioning, right? So here what you have is show me the top 20 stocks with the highest 1 year percentile of 1 month skew, right? Very, very complex query. This basically is showing you if the skew is sitting at the 100 percentile or not, or roughly 100 percentile, so the highest one. So that can tell you if the skew is really in an extreme positioning. But you can also do Jack's put call ratio, lowest 1 month skew, and another Jack's put call ratio here. So you want to look for extremes, right? So this could give you some really interesting ideas. Let's go into the option selling side, right? So here we have top 25 stocks with higher rank above 70 positive Jacks and market cap over 20 billion. We've seen this. Top 20 healthcare stock with VRP greater than 10% and volatility score greater than 3. So again, if you're looking at a more stable sector, you want to sell premium on those assets, you are looking for a VRP greater than a certain percentage and a score there. Let's say that you want to trade stocks that are approaching put support. You believe that there could be a bounce there, but also they have a big IV rank, right? So you can see stocks that are approaching a major level that are pricing high in volatility. So you can run some search there. This one is pretty cool. Top 25 stocks with backward dated term structure, right? So when we go back into our data, here we have backwardation, contango, we talk about that. But how can you screen for assets that are experiencing a backwardation or a contango structure? Well, we've created the ability right here. So you have a backwardated contango term structure, and you can search for that. You have NVRP here, something really interesting. And then let's look at directional. So there's one that I really like, this one, which is the top 20 stocks by OI call percentile 3 months. So what does that mean? Is that these are stocks that are seeing the largest OI on the call side over the past 3 months. So what does that mean? That the call open interest on Marsh or Brookfield or any of these companies is at the highest. And why is this important? Because that could be a directional signal. It could mean that the market is buying more calls than puts. So you can use that percentile to find really interesting ideas. But again, you are not limited to that. You can actually create your own screener. You can combine multiple factors, and you can basically save it right here and access it every time that you use the tool. Right. I'm gonna go back here for a second, and I'm gonna stop the recording, and then we're gonna go into our Q&A. So again, guys, if you want to try Quinn for free, you can create a free account. All the links Alex has sent in the chat. You can create an account, try Quinn for free. If you want to access our premium platform, so all our indicators, models, Quinn messages, 100 per week, then you have premium. If you want more access to Quinn, 10 times, and if you want to join our live pro trading every morning with Patrick and the guys, then you can use our pro. You have all the offers here. I'm going to stop the recording, and I'm going to go answer all those questions.